Hello, am I audible? Hello, am I audible? Can someone please confirm it in the chat box? I can see one Biswanant Nayak. Hi Biswanant, how are you? Thank you Dragon for confirming it. Hi Nilesh, how are you? Let's wait for some 5 to 10, I would say just 4 to 5 minutes and then we will start. So how's your preparation going Nilesh and Krishna regarding RBI Grade B 2022? Hi Krishna. I can see many people are there from our LPS session only. Nice to see you here as well. Thank you, Dragon. Really means a lot. I will try to provide as much value as I can. That's great, Nilesh. If your preparations are going good, that definitely means that you will be scoring really good in today's session. Good to hear that, Krishna. So just a few more minutes wait and then we will start. Hi Vijay, how are you? So let's first start with some warm-up questions because warm-up is really very important for scoring big. So first tell me how many subsidiaries of RBI are there? Fully owned subsidiaries of RBI. If you can name it, then it's definitely good. But first you have to tell me how many subsidiaries of RBI are there. Please write in the chat box. Don't be a couchy potato in my class because that will be really disadvantage to you. Come on, I'm waiting for your answers. How many fully owned subsidiaries of RBI are there? This can be a potential question in your phase 1 as well. I can see Mahesh is saying 5. Nikhil is saying it's 2. 5, sir. Vijay is saying it's 2. Nilesh is also saying 5. I can see the answer has been confusing between 2, 4, 5. So this shows the level of your preparations, and in today's session also we will be covering many important facts related to RBI, and that can come in your phase 1 of the exam as well. More than 43 people are there live today with us. Tell me how many subsidiaries of RBI are there? That's the most important question. This can be a potential question in your phase 1 as well. Nikhil, this is the warm-up question, and the question we will be starting with different questions. This is just a warm-up question, just to warm you up, just to wake you up from the sleep. See, the correct answer is 5, not 4. Recently, RBI Innovation Hub has also been added. So those who are saying it's 5, kudos to you because you are doing really great. And those who have said it's 2 and 4, kindly update yourself because this can be a potential question. Hi Sumit, how are you? So there are 5 fully owned subsidiaries of RBI. Please take a note of it. Chalo then now begin with our session now. I will be not be wasting your much of your time. See, in today's session, we are going to cover 100 most important finance MCQs, and these particular sessions will be very important for your phase 2 as well as in your phase 1 as well. Because right now I have asked you a very basic question, and I can see many of you are going wrong. So in this particular session, we are going to cover complete finance revision, and more than I would say 10 to 15 topics will be covered up, which are directly mentioned in your RBI syllabus. So my dear friends, the first and the foremost thing is that it is my challenge for you to score above 75. If you are scoring above 75 in this particular session, then definitely your preparations are on the right track. Okay, so please be with me for next, I would say, 1.5 hours. We will be covering many important questions, and then we will be beginning up with great different types of concepts as well. Yes, Nikhil has said it right. IFTA's Ribbit, Bharatiya Reserve Bank Note Mudra. So there are 5 total subsidiaries of RBI. So before moving ahead, this is our success sale which is going on EduTap right now. So if you want to subscribe to any of our courses, so you can get additional 10% plus 40% of the courses, and all you need to do is just use this particular word which is known as RBI, and it can land you up in your dream organization as well. Then let's first start with that session. Before moving ahead, the PDF of this particular session will be available on the Telegram channel, and all the free stuff related to different subjects is available on this particular channel, and the link of the same is given in the description box below. Moreover, I request you to please subscribe to our YouTube channel for getting every important update. So now, my dear friends, let's start with the session. Please don't be a potato in my class. Please be active. Now let's start the session. The first question is regarding time value of money. A very important concept which forms your basics of bonds, capital budgeting, and different chapters. If you are not thorough with time value of money, then definitely you are doing a wrong mistake. Come on, I'm waiting for your answers. Here you have to identify the incorrect statement. Please be with me. Read the question carefully, and then you will have to answer it. The question number 1 is regarding time value of money. Come on, I need answers from everyone. Then only you will be able to clear the mightiest game of RBI Grade B. This is a very easy level question which can be a potential question in phase 2. Read all the statements carefully, and it's a very easy question, I would say. I can see Nikhil is saying it's B. You have to identify the incorrect statement, my dear friends. Please read it carefully. It's a very important question. Time value of money is a very important concept regarding your capital budgeting, regarding your bonds. So different concepts will be tested. I can see the right answer in the chat box now. Earlier I was getting wrong answers. So my dear friends, not wasting much of your time, the correct answer will be D. See, first of all, you have to understand there are two values, the present value and future value. If you have to go on to the future value from present value, then this particular activity is known as compounding. If you have to come back from future value to present value, it is known as discounting. So if you read statement D, the inverse of compounding is termed as cashing out. This particular statement is itself wrong. So those who are going with B, C, A and E, please recorrect yourself. Statement A is very much correct. It just says its future value. Statement B is again correct. It says the worth of money which is receivable or payable at future date is called present value. As simple as that. Statement D is incorrect because of the word discounting will be here. Statement C is also very much simpler in a very much, I would say, concept wise. So I have already explained you the concept of present value and future value. If you have to come here, then you will have to use compounding. If you have to go back, then you will have to use discounting. Hanji. Now let's begin with our question number 2. Let me see the chat box. So only Sonali has given the right answer along with Biswa Nayak, Rupesh Ranjan and everyone else. I request you all to please participate. It's really very important to take part in the current session, else you will be very much, I would say, at a loss side. Question number 2 is in your screen now. It's related to bonds. This particular chapter is also very much important. So if you analyze the previous year questions, then you will see more than 5 to 6 marks is the average of this particular topic. Hanji, so I can see questions answers are now coming out. Many of you are going with D. Okay, we will see. A and B are correct. Ahmed is saying it's A and B. This is a very basic level question, and this is the level of RBI grade B. Because if I hope you have seen a video which was there regarding the syllabus of RBI by Jalaj Sir, they have added the word journal. So if you see, this is the journal concept testing. Yes, my dear friends, now it's time to reveal the answer of question number 2. D is the correct answer. See, first of all, remember these relationships. First of all, bond price is negatively related to the interest rates. I hope you know the reason. I will be telling you in the short while. Bond price is again negatively related to yields, and bond price, or I would say rather interest rate, is positively correlated with the yields. So these are the three very basic relationships. Don't worry, you will get the clean handwriting in the explanation part. So option is D. These are some basic, I would say, revision purpose for you. Now, for those who don't know why this particular thing is there, I would tell them that this is a very basic concept. This is a very basic concept. If you see bond prices, or if you see different bonds, they pay a, let's say, 10% fixed interest rate. But now if you say or demand of this particular bond will reduce, so as demand reduces, the prices will fall. Now let's come to question number 3. Identify the types of bond which receive fixed income throughout its life, and there is no maturity date in such bonds. I need answers from different students. I can see someone is asking book for finance. You can refer to the different videos which have been made by EduTap. You can go to there. In that particular thing, we have added different sources as well. So I can see many of you are troubling between A, E. Okay, all of the above. D is also the answer. Okay, let's see what's the correct answer right now. Okay, we will see what's the correct answer. So many of you are going with D. Yes, my dear friends, this particular concept is very much easy. All these three are synonyms. So the answer will be perpetual bonds, but if you see, consoles are also a type of a perpetual bond only, and they, in short, perpetual bond is also known as perp. So all threes are synonyms. So it was really a concept testing question and nothing else. So if your concepts are strong, then this particular question will become a cakewalk for you. Now, my dear prawns, sorry. Now, my dear friends, do you know about zero coupon bonds? Please tell me what is the meaning of zero coupon bonds. I can know that many of you can write more than 100 messages on WhatsApp. Let's see what is the meaning of zero coupon bonds. I need the answers from each and everyone. What is the meaning of zero coupon bonds? I hope the question is very much clear to you. Dear bonds. What is the meaning of zero coupon bonds? Just in one word, or let's say, yes, issued at discount. I can see maximum of you are saying yes, issued at discount. Ahmad is saying without any interest rate. No interest coupon issued as, yes, Steve has given the perfect answer. I would say a well structured answer rather, not a perfect one, because in zero coupon bonds there has been a zero coupon, which means you will not get any interest, and these are just for capital appreciation. For example, if I am purchasing, let's say, zero coupon bond at rupees 100, its face value is 120. Okay, and at redemption price, at redemption I will get rupees 120, but my purchase price is rupees 100. So now I can see my capital has appreciated by 20 units. So this is a very easy example of zero coupon bonds. Hanji, so everyone has given the right answer. Kudos to you, Nilesh, Sonali, Sumit, everyone. Let's move ahead to question number 4. See, I'm not reading out the explanation part. That is for your revision purpose. And if you are revising it, then this particular thing will be a very important component for you. Question 4, friends. Identify the types of bond. This is a very tricky question, I would say. So those who will answer correct, those who will answer it correct, there I would say conceptual clarity is on another level. Hanji. So what will be the answer for this particular question? I can see the first answer which is coming from Nilesh is E. See, don't do and hurry up, wait for your answers and tell putable bonds. Okay, I can see maximum of you are going with E. Why cannot be the answer B? It can be B as well. See, Ahmed is saying it's B. Now I can see someone will say also C as well. It can be C as well, right? Right now I'm taking answers from different students. See, this particular question is also from bonds. Bonds and time value of money are very much correlated and based on the same concepts. My dear friends, the answer for this particular question, B if issues. See, the answer of this particular question is E. See, first of all, callable bonds में the I would say the company has the power. Company has the power to call the bonds. They can even redeem that particular bond before the maturity. But under putable bonds, investor has the power to sell the bonds back to the company. So you will have to remember the difference between callable bonds and putable bonds. Again, I am repeating. Under callable bonds, company has the power to call the bonds from the general public, but under putable bonds investor has the power to sell back the particular bond to the company. So this is a very I would say very easy explanation. Only your concepts was tested here. Convertible bond, as simple as that, bonds can be converted to different types of equity instruments after some period of time. Callable bonds I have explained. There is nothing known as QWERTY bonds. I have just used this word to confuse you. Under amortizing bonds, you will pay a certain amount of money over a period of life. It's not like you will be paying one lump sum amount at the maturity. Under amortizing bond, I will be making series of payment to investors over a period of time. Sir, volume thoda increase karo. Okay, I will definitely be increasing my volume now. Thank you. Now let's move to, this is the explanation part of question 4, sorry. Now let's move to question 5. Again, concepts. Please keep remember your scores as well. What's masala bond? Nikhil, you can ask all your queries in the, I would say, end part of this video. Let's not disturb the session of this quorum of this particular session. We will take all the queries in the end of the session, because if I start taking queries from each and everyone, it will become a very much halwa, I would say. And by the way, very Baisakhi to all of you. Have a very happy Baisakhi rather. I can see maximum of you are going with B. Rupee denominated. Nitish, I request you to please be on this particular question now. Do not discuss it in between, because we will take every query in the end of this class. We will discuss it like a brainstorming session. Masala bond is a very easy concept. We will discuss it in the end of the session. Hanji, so what is the answer for question number 5? No issues, Nikhil, it happens. See, the answer of this particular question will be B. Now, my dear friends, my counter question to you is that what is the other name of balloon repayment loan? What is the other name, or what is the synonym of balloon repayment loan? Balloon repayment loan. Can you please tell me the other name? It has been mentioned in the notes which has been provided by EduTap, and it is a very important financial concept. If someone can answer what is the other name of balloon repayment loan, the answer is B only. I can see this particular question has got very less response. Hanji, so what is the other name of balloon repayment loans? See, balloon repayment loans are also known as bullet payment loans. So you have to remember this particular concept as well. You will be paying this particular amount, lump sum at the amount, I would say, at the maturity. So please remember this. This is very important concept. Now let's start with, yes, Steve, you are correct. It's bullet. Very, very good, Steve. I really appreciate your knowledge. Okay, now question number 6. Kudos to the knowledge of Steve and Nikhil as well. Question number 6. Again, now we have covered time value of money. We have covered bonds as well. Now we are moving to derivatives. Derivatives, again, very important chapter. If you can answer this question, then your concepts are really very good. Derivatives, we have future, forwards, options, swaps, warrants, different types of concepts. So we all will be testing in this particular class only. I can see the answer from maximum students. Many are saying it's D. Okay, let's see whether D is the answer or not. See here, don't get confused between these two words. The first is standard contracts. The second is also known as customized contracts. Those who are in share trading business, for them this particular term is very much easy. Hanji, my dear friends, the correct answer is D only. Please remember this particular thing, that all the forwards are customized in nature. Why I'm telling the word customized? Because I can change the conditions of this particular contract according to my convenience. But when it comes to futures, these are standardized in nature. Why they are standardized? Because these are offered by the stock exchanges as it is. So I have to accept this particular future contract, in as it is has been offered by the stock exchange. But forwards may I can customize this. Now my dear friends, please remember this, all the contracts which are traded on stock exchange, for example futures and options, all these contracts are standardized in nature. You cannot change the terms and condition according to your will. But under forwards I can change the condition. For example, even in swaps, all these are not traded on stock exchanges, right? So that's why they are traded on OTC, and on OTC is also known as over the market. Under over the market I can make the changes according to me, but under these two particular contracts I cannot make. Now let's move to question 7, again from derivatives. If your concepts are good, then you can easily score above 18 in this particular session. But if your concepts are weak, sorry to say, then moving above 50 is also difficult. Hanji, so we have question number 7 now. Question number 7. Again, you have to identify the incorrect statement. Hanji Prashant, OTC is over the counter only. Please mention the statement which is incorrect over here. I can see many of you are saying it's C, I think. OTC customized. Okay, we will see. Nilesh is saying it's E. Rubal Das is saying it's C. Nikhil is saying it's again E. Arpit is saying it's C. Steve is saying it's C. Also friends, please let me know if I'm running at an optimum pace. Should I increase the pace or should I decrease the pace? Whatever your demand is, please let me know. Sonali is saying is also C. Nitesh is saying it's E. So I can see maximum of you are getting confused between these two components only. Sumit is also saying it's C. Now Nilesh has moved up to C, I would say. Increase. Okay, Arpit. See, the correct answer of this particular question is C, because in OTC markets we cannot have a world of finance. Future contracts are traded. This particular concept is wrong. Futures are traded on stock market. Forwards are traded on OTC market. Please remember this. Now let's move to question number 8. Okay, I will be increasing my speed now. Now please, my dear friends, don't get afraid of numericals. Margin call is a very important concept. Even in SEBI phase 2, this was a question there in the particular exam, and this is a very cakewalk question. All you need to do is just remember one formula. My dear friends, the correct answer here is B, because margin call is equals to stock price, or I would say the current price, into 1 minus initial margin divided by 1 minus maintenance margin. So here stock price is, I would say 1000. All you need to do is 1 minus 80%, which will be 0.20, and 1 minus 20%, which is 1 minus 20%, which will be 0.80. This is 1 by 4 and this is 250. As simple as it. Don't lose your marks over here. Nilesh has given the right answer, I can see. So this is the explanation of that. I know many of you will not attempt this question, but these are some two crucial marks. It can be there in your phase 2. Hanji Nilesh, thank you for confirming the formula. Your concepts are really very strong. Now let's move to question 9. Question 9 is about pricing of futures. Again, a very important component of your syllabus. Derivative markets, very, very important. Pallav, please tell your queries in the end. Please, we cannot disturb the flow of this particular lecture. But to answer in a very short manner, yes, everything is possible. Okay, Sumit, I will give you some time. Sorry for first moving out fast. I can see maximum of you are going with A. Okay, maximum of you are again going with A. Okay. Yes, my dear friends, the correct answer is A only. When it comes to pricing of futures, there are two methods. The first is expectancy method and the second is cost of carry method. Under expectancy method, there has been no relation between the, I would say, future value as well as the present value. All you need to remember is this word, trends. When let's say there has been a bullish trends, for example, which is currently going on, the stock prices will rise. When there are bearish trends, the stock prices will fall. For example, in COVID times, you can see there was bearish sentiments in the market, so stock value was coming down. But under bullish, right now also you can see in the recovery phase, this is COVID recovery. Okay, so we can see many of the stocks are going up. So you will have to remember this particular also. I can say as an analogy, trend is your best friend. Is your best friend. So this is also very important, I would say, slogan of expectancy model. Under cost of carry method, there has been a one formula. If you want to remember it, you can remember it. Unless for RBI, I don't think RBI will go that much deep. So here the stock price, I would say the future value or the future price of an asset is equals to stock price plus cost of carry minus return expected. As simple as that, nothing much to worry. All the values will be given in the question only. So option A is the right. Now let's move to question number 10. Question number 10. Again, a statement based question based on swaps. So we have covered different agreements till now. Different types of swaps. I can see Nilesh is going with C. Nikhil is also going with C. I can see maximum of you are going with C. Nitesh is giving the answer for statement C, I think. Please don't be a potato in my class. Please actively participate. Else I will be moving out with a bullet speed. Sumit is given a different answer, which is A. Let's see what's right. Rubal is also saying it's C. My dear friends, first let's understand what is swap. A swap is an agreement between two exchanges, two parties to exchange sequence of cash flows for this. So this statement is as much straight and simple. Statement A is correct. Swaps are not traded, are not exchange traded. This is also very much right statement. Statement C says that there is no risk on the counterparty. So this is false because there is a risk of counterparty. Please remember, forwards are also not traded on exchange. So those instruments which are not traded on exchange, they will carry a counterparty risk. So the answer will automatically become C. So why? Because statement A and B are correct. C is wrong. There will be a risk. So this statement becomes wrong. So now you have to understand the power of reading. Please read it carefully, otherwise you will be losing all your marks. Now let's move to question 11. I'm not reading out the different explanation because it's for you. When you want to revise, the PDF will be uploaded in the Telegram channel, so you can read it whenever you want to read it. Question number 11. I am waiting for 30 seconds or max to max 40 seconds for you to answer. This is an optimal time because all the questions are very much basic in nature. No need to be sorry, Sumit. It happens. So now you also have to incorrect statement. This is from options. Rightly mentioned in your RBI syllabus as well. Derivatives. We have covered basics of derivatives of future, forwards and swaps. Now we are moving to options. Hanji. So maximum of you are going with D. Okay, we will see. Nilesh, Nikhil, Steve, Vijay, Nitesh, all are saying it's D. Sonali is also saying it's D. Okay, we will see the answer. Let's wait for another 5 seconds, I would say. See, my dear friends, it's a very basic question. If you are not able to attempt it right now, it means that your preparations are lacking. The time has come to pull up the socks and study as much hard as you can. Yes, my dear friends, D is the incorrect statement because buyer of the option is also known as holder of the option. At the same time, seller of the option is also known as writer of the option. As much clear as it could get. So statement C was like a very easy statement to identify. C, under call option, for example, let's say current Reliance share is priced at rupees 100. I think that this particular share has a good potential and it can rise to 200. So I will get into an agreement, let's say with B, to into a call option agreement, and I will be paying certain amount of premium to B. So buyer pays a premium to B, and after an expiry, let's say this particular price is almost at hitting 200, then I will execute this particular contract. But under put, you will have to remember, if I am getting into put, then I am expecting the Reliance price to come, let's say, to 70 or 80 levels. So first and the foremost important thing, please remember this: under call option, if I am buying a call option, then it means the prices are rising according to me. But if I'm selling up, or if I'm buying a put option, again I want to repeat, if I'm buying a put option, then definitely it means that I am expecting price to reduce. So this is a very short and sweet introduction of call and put options. Now the answer is D. I have already given you a very important thing. Also, one of the most important thing, under call, the buyer of the option gets right to buy. This is also a very important concept, right to buy. But under put option, I will get right to sell. Okay, so this is also a very important term and introduction to different types of options. Now, this particular question is again a concept testing question. Within a span of 30 minutes, we have covered 12 questions, and all these are really like RBI Grade B level only. Question number 12. Who is going to give me a correct answer? This is tricky if you do not have any knowledge regarding options. For those who have it, it's very easy. Just seconds before I have told you the correct answer only. So many of you are going with B. Nilesh is saying it's put. Why someone is not going with A, C or something? Come on, I need someone different answer. Yamini is also saying it's B. Yes, my dear friends, B is the correct answer. What is the keyword over here? Which type of option gives the owner the right? The owner is obviously the buyer. The right, not an obligation to sell. So when I say right to sell, it's put option. Now, my dear friends, tell me, if I tell you what is right to buy, then what will be your answer? If same options are given over here, what will be your answer? If I say it's right to buy, then what will be your answer? Okay. Many of you are now saying it's call. So putka, many of you are thinking that it's putka opposite only. I can see maximum are saying it's call. Okay, yes, this is the right answer. One more counter question to all of you. For example, Ram is thinking that the price of, let's say, ITC Limited is going to fall. What is the best option strategy for him if he wants to invest in put options, whether he will buy it or either whether he will sell it? I am again repeating this question. For example, Ram is planning to sell ITC option. Put, yes, what he will do in put? Will it buy it or he will sell it? This is a very confusing question for you, I know. Hanji Nikhil, you have given a perfect answer for this particular question. Kudos to your knowledge. You are really doing good. Short selling. Short selling is not done in options. I think short selling is done in the mostly in the shares part. Chalo, let's move. I know this was a very, I would say, a vague question, but just to check your knowledge. Sell put. No, Vanshika, it will not be sell put. It will be buying put, or you can also say selling call option. Selling put means that he is expecting price to increase. So please make your concepts. Yes, Vicky is also given a right answer. So now I think the question was not vague. Now again a question on options. Again a very important because option is important. A very easy question, nothing much to worry about. Simple question. So who is going to give the right answer for this particular question? Let's see. I can see starting B, C. We will see the right answer right now. I request you everyone to please participate. Even Nitish has given the right answer. Many of you are going with B. Okay. Vanshika is also saying it's B. I request you everyone to please participate, because if you are not participating, then you are hitting your head with stone. Doing mistakes right now is really very good, but doing mistakes in the real exam, it will be a blunder. See, my dear friends, B is not the correct answer. Now I am giving you an option to please reattempt this question now. B is not the right answer. Please reattempt it. Now Reshma is gone with C. Okay, we will see. See, to end the suspense, the answer is A. See, first of all, buyer has to give a certain premium to our dear friend, which is also known as seller of the option or the writer of the option. Now this particular premium is made of two parts. First is intrinsic value, the second is time value. Under intrinsic value, all you need to remember is that it's the value by which your option is in the profit. As simple as that. Profit, or even, or I can say break even. Plus and minus में confusion, no issues. See, this is plus, we call this as plus, and this is minus. Okay. And what is time value? Time value refers to volatility. If you are having a larger time value, then means your options prices will be going up and down. So the correct answer is A. Okay, so the answer will be intrinsic value plus your time value. Please remember it. There are three types of, I would say, intrinsic value, you can say, or different components. First is at the money, out of the money. One is also known as in the money. See, there are different components, but just to explain you in very short manner, in the money means that your option is in profit. Now there can be different concepts, like I have already mentioned it here, but not taking your much time a lot. In the money means that you are in the profit. For example, let's say if I am purchasing price of 100 of Reliance is 100 and I'm selling it at 120. This is a call option. Okay, so I am in the profit. My in the money value will be 20. At the money means that I am at break even. Yani my profit is also zero. At the same time, losses is also zero. So please remember that intrinsic value will be correlated with these two particular terms only. Okay, this has to be remembered up. But out of the money, mein intrinsic value will be zero. Just remember this. This is the concept which I have also shared with you. Time value is all regarding volatility. Nothing much to understand. This is a very theoretical concept. But just remember the formula of, I would say, option premium. Many of you have given the wrong answers, but Nilesh and Vicky has given the right answer. Now let's move to question 14, my friends. This I think is the last question for derivatives, and then we will move to equity. Equity has been my favorite topic because I got many doubts at the discussion forum as well. Hanji. So what will be the incorrect statement? This is a very easy level question. Hardly it will take 5 seconds for you to answer. Come on, I'm waiting for your answers, people. Please participate. Read the question. I can see maximum of you are taking much time now. Okay, so Nikhil has said it's B. Nilesh is also saying it's B. Okay, let's see the answer. Or I would say just wait for some other people to reply. I request to everyone to please answer. There is no negative marking in my test. Well, it can be C as well. Prachi is also saying it's B. Nidish Mani is saying it's C. BBC. A very important. Yes, my dear friends, the correct answer is B. You have to identify the incorrect statement. Why this particular statement is wrong? Why? Because buyer pays the premium to seller. So I have just used a component which is known as word play. All you need to do is just read the question carefully. Otherwise, you will not be able to answer it correctly. Word play is a very important component over here. Yes, now I'm getting the right answer. Nitesh and Vicky are also saying it's B. That's really good. So this particular component is covered up. Now let's move to equities. This is a very, very important chapter. If you see past 5 years, more than 50 marks question is just from these particular two chapters, equity plus debt. So, Hanji, Nilesh has summed up it very right. So Rohan is saying it's C. I can see. What is the benchmark for National Stock Exchange? This is also known as NSC, very popular. How many shares does it constitutes of? Nikhil is saying it's E. So those who have given recently SEBI phase 2 or phase 1, like me, though these people know the answer, I think. Vicky is saying it's D. Sumit is also saying it's D. Yes, my dear friends, the correct answer is none of the above. So this was a very basic question. Please remember there are two stock exchanges in India which are very, very popular. Although there are different stock exchanges, but let's focus on right now these two particular shares. See, the benchmark for this is Nifty, which composites of 50 shares. So that's why the answer for this particular question was E. But under BSE the word is Sensex. This is a key indicator and this contains 30 shares. So that's why this particular index is also known as broader share. Most important thing, BSE was the first and the foremost national stock exchange which was established, I think, in 1875. It was started by one of the traders which is known as Roy Chand. And Nifty, the current CEO of Nifty is, I think, Vikram Lemay, and the current CEO of BSE is Ashish Chauhan. So all these are some key different knowledge which you have to take it. Please now let me test your knowledge because testing knowledge has been the most important. Tell me what is the full form of Nifty? What is the full form of Nifty? Hanji. What is the full form of Nifty? Yes. Now Let's open the discussion and let's open the forum now. What is the full form of Nifty? I am telling you, if you be with me for next, I would say 1 hour, you will be like most knowledgeable person. I am asking you then, please, Nilesh and Nitesh, please listen to my question. You are saying National Stock Exchange. It's the full form of NSC, not Nifty. Please read the question at least. I can see Vanshika and Steve are having the same answers, National 50. Yes, my dear friends, it's National 50. That's why you have to remember that there are 50 shares. Now, my dear friends, tell me what is the full form of Sensex? Very much easy. सुमित इज सेइंग इट्स पता नहीं, कोई बात नहीं, आप यहाँ से पता कर सकते हैं. हाँ जी, so what is the full form of Sensex? I'm waiting for your answers. Give options, can guess. It will take much more time. Let's not waste it. Yes, Steve has given the correct answer as the first. It's sensitivity index, and it comprises of 30 shares. As simple as that. So this was regarding different stock exchanges. Now let's move to question 16 rather. One of the most tough questions of this particular series. If your concepts are weak, then sorry to say, I will have to explain you. Reshma is also saying it's sensitivity index. Yes, it's sensitivity index only. Nifty stands for National 50. Hanji, so now I'm waiting for correct answer of question 16. This is the tough question. I'm saying it take 1 minute to answer it, but answer it correctly. Oh wow, someone is starting the answer now. D, A. Nikhil is saying it's D. Akhil is also saying it's D. Okay, I can see some many good answers as well. Someone is also saying it's B. FPO offer for sale. Pradipan is saying it's C. So I think we have got all the options. So my premises, it was tough, is correct because I can see many of you are going with different options. Yes, my dear friends, the correct answer is D. Why it has been a D? Because it is already said that suppose a company is already a public limited company, it has its shares listed on the stock exchanges. So this was the key term over here, and many of you who has the concept clear, they have answered it correctly. The answer is D. See, first let's understand the concept. Just a small concept. I'm not taking it much. See, initial public offer are for those companies who are making a debut on stock exchanges. These are unlisted. For example, Paytm recently. I hope many of you have not invested in it. But still, if you have invested in it, then Paytm recently made a debut on stock market. So why they have made a debut? Because they're making their first time appearance in the stock market. Future on public offer are for those companies who have been listed. Okay, so this is the key term between the two. Okay, just remember this particular diagram and avoid the rest for right now. Now, my dear friends, my $1,000,000 question to you is, this is really very important. Disinvestments. If I give you, or I would say let's opt for this particular options only. Disinvestment is a type of which type of I would say offer. Then your answer will be what? You have to type ABCD only because same options are there. Disinvestment is a type of which type of offer. As simple as that. Sorry, disinvestment is a type of which type of offer. As simple as that. I'm waiting for your answers. I will not move ahead if I didn't get a right answer. So now Nikhil is going with initial public offer. Okay, we will see. Vanshika is saying it's A. Nitesh is saying it's C. Disinvestments. Varun is saying it's B. Okay, so many of you are going with initial public offer for sale. B or D. My dear friends, the answer will be again D. Why? Let's discuss it. Disinvestment, for example, BPCL, Bharat Petroleum Corporation Limited. Yes, Sumit has given the right answer. It's the only. Why? This particular company was already listed on stock exchanges, and for listed, if you are listed on stock exchange, then you are selling your shares again to the third party. That will be a part of offer for sale under future public offer. So if your concepts are not clear, we can cover it up in a different classes. But for now, please remember, disinvestments will also be a part of future public offer only. It cannot be is also a disinvestment. Yes, you can also say it, but at the same time, remember it's an offer for sale. Under disinvestment, I will be selling my shares to another party. If you are not thorough with the concept, there is a separate series which is run by EduTap, which is Phenonomics. Under this particular lecture, financial markets, we have covered three different lectures. We have covered all these particular components in that particular lecture. So you can go over there and you can find detailed explanation. So now let's move to question number 17. I'm very sorry that I cannot explain much more on that particular part because we have time constraint as well. Question 17. I can see Sonali saying it's B. Let's see. Let's wait for correct answer of this. Varun, there has been a series which is known as not Phenonomics, it's Phenonomics. This has been a series. If you go to the EduTap channel, you can find this particular series. In that series, we have a different lectures on markets, financial markets. I'm really very sorry for my handwriting, but this is how it goes. Hanji, so I can see maximum of you are going with A, B and C. Okay. Yes, my dear friends, the correct answer is C. Now there are different types of preference shares which we have already covered up in a different series of phenomics as well. Convertible, you can convert them into the equity shares. Under non-convertible, you cannot do them. Redeemable, you can redeem them before the maturity. Participating, you can take parts in the additional profit. Under cumulative, in this particular share, a company will be paying you dividend even if it's in a loss. The correct answer will be option C, irredeemable, because under India you cannot issue irredeemable preference shares. The maximum time for issuing preference shares is 20 years. Under 20 years you have to redeem them. But there is also a condition of 30 years, but this is, I would say, for infrastructure companies or for highway purposes. But if you want to remember this, this has been the key term that in India you can issue preference shares maximum for 20 years. Now let's come to question number 18. A very important question when it comes to the IPO. Who will give me the right answer for question 18? Nikhil, it's saying it's D. Actually, the answer is already hidden in the question itself. Sumit is saying it's B. Let's see what the right answer is. Okay, so now time for the correct answer. The correct answer will be D, not B. See, when it comes to the IPO, please remember these three particular figures. Let's say if a company is offering 100 shares, I'm telling you very hypothetical example. So there are three categories which is known as, first is retail investors, second is qualified institutional buyers, and the third is high net worth individuals. Or I would also say them as a high net worth individuals, or I can also say them as a non-institutional investors. First and the foremost, you have to remember that 50% of the shares of the IPO have to be reserved for QIB. So for example, if 100 shares are there offered by some company, let's say for LIC only, if they are coming for 100 shares only, so that will be they will have to issue 50 shares for qualified institutional buyers. Who are these qualified institutional buyers? These are big financial, I would say big financial, uh, you can say that mutual funds, pension houses, financial institutions. Now, who are retail investors like me and you? If your dad is investing in the stock market, then he is categorized as a retail investor, provided that he is investing less than 2 lakhs. So this is also a very important question, that retail investors may they invest less than 2 lakh only. So for them the condition is 35%. So 100 ka 35% will be 35 only. And then high net worth individual, they will be offering 15%. Okay, so you have to remember these three particular categories of investment. And at the same time, please remember the different categories percentage wise. Plus also remember this particular term, that under retail investor, the maximum they can invest is 2 lakh. This is the most important thing. So answer is D, not B. Okay, so the answer is D only. Now let's come to different types of prospectus. Now we are moving to equities. Equities has been a very important component of your syllabus. QIBS, big institutional investors, but I would use the word qualified institutional buyers only. I can see more than 50 people are live here, but I can not able to see the correct response from different peoples. I can see maximum of going with A and D. See, there are two. First, when you are going to IPO, you have to first file DHRP, which is also known as draft red herring prospectus. So the correct answer will be A. Under draft red herring prospectus, I will be giving all out information regarding my company, regarding the issue size, regarding different types of price band as well. So this is the most important component which you have to remember. For example, recently if LIC is coming into the market, then they will have to issue draft red herring prospectus for all the investors who are sitting out there. Another very important prospectus, or I would let's say ask you the counter question, do you know the meaning of a bridge prospectus? A bridge prospectus, what is the meaning of a bridge prospectus? Hanji, so I'm waiting for your answers. Let's check your concepts. What is the meaning of a bridge prospectus? Further issue? No, 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 it's not further issue. A bridge prospectus, and there is also one known as shelf prospectus. So if you are thorough with the concepts, then these two particular questions are cakewalk. Summary of prospectus, yes. This is really very good answer from Nilesh. A bridge prospectus is summary. Now, what is shelf prospectus? Shelf prospectus, if let's say if a company is going for different types of issue under IPO and FPO, then this particular prospectus is issued to avoid different multiple prospectus. As simple as that. For example, if I'm issuing let's say shares in January, then I'm again issuing shares under February. So I do not have to issue different types of prospectus every again. So what they do to avoid different types of prospectus, they issue self prospectus. IPO, let the first they are offering different types of price band. Let's say this is the price band. So they tell that in the final issue that this is the final price band on which bidding will start. So now let's come to question 20. Again a very important component of equities market, green shoe option. Hanji, Shubham has given a more structured answer, I would say rather. Good, Shubham. Yes, Sonali, your concepts are also very good. Single prospectus for multiple offerings yet. Let's wait for correct answers of question 20 now. A very easy concept of green shoe option. Hanji. So what is the correct answer for question 20? So we have covered TVM, we have covered bonds, we have covered derivatives made, swaps, options, futures and forwards. Now we have moved to equity. Under equity we have covered different components, but now the times come from green shoe option. I can see maximum of you are going with C. Yes, that's the right answer. Under green shoe option, if let's say if Paytm is also there, their price collapsed more than 10% after listing. So they could have opted for green shoe option. Now please remember this particular fact that under green shoe options, this has been the condition that you cannot issue more than 15% of the total extra price. So this is also a very $1,000,000 point which you should note or which you should revise as well. Now let's come to question number 21. A very important concept regarding floor price. This particular thing is also there has been in the draft red herring prospectus which we have covered, also in the final prospectus. So please remember what is the floor price. Hanji Nilesh, you have given the right answer. Limit of 15. What is price band? First you have to understand that. I can see maximum are saying it's C and D. Okay, we will see. See, when a company has to go for IPO, there has to be a book building. Book building means that there will be a price discovery. Yes, my dear friends, the correct answer is this only. For example, let's say this is 100 and this is 110. So this is known as lower price and this is known as higher price or also known as ceiling price. As simple as that. Now, my dear friends, I am going to ask you a very tough question, I would say. Tell me what can be the maximum difference between these two prices? What can be the maximum difference between lower price and high ceiling price of an IPO? Options are 10%, 20%, 30%, 40%, and 50%. Yes, my dear friends, I am now waiting for your answer. Let's see who has the most, or I would say the greatest clear concepts. Nilesh is saying it's 5%. It's not even in the option. Sumit and Vijay are saying it's 20. Mani Mishra is saying it's 10. Shubham is saying it's 20. My dear friends, the correct answer is 20. So please remember this. Please remember this. It's not 30, 40, 50. The difference between the lower price as well as the ceiling price can be only 20% only. Okay, so please remember this. This has been my point of raising to it. Now let's move to buyback. Now EPS and EP. Let's see who answers this particular question correct. I know maximum of you have done a good rectification of this particular thing. Let me write the formula for EPS. By the time please you answer it. Santosh is also given the right. Prachi is also 20. Yes, the correct answer for that question is 20% only. Hanji, I will wait for more than 1 minute in this. This is a very easy question. Hardly just reading of concepts is really very important over here. Many of you have started giving the right, I would say controversial answer rather, C and B. If you have any doubts, then we will clear it in the end of the lecture only, because if I take all the doubts now, it will be really very difficult for covering this lecture under the stipulated time. So those who are giving the option B or those who are giving option C, I think now Jyoti is saying it's D. So I can see maximum of you are confused in this particular concepts only. See, the correct answer is B. So first of all, really kudos to all those people who are giving the answer as B, because your concepts are really very good. First, understand this particular concept. See, under buyback, what happens is that I buy the stock directly from the investors. So I take back the shares from the investors which previously I have issued to them. So as simple as that, I am again taking the control of my company. So if you remember the formula of earning per share, so number of outstanding share is in the denominators, which is earning is above the numerator. So earnings divided by number of shares. So so when you are doing buyback, so number of shares will increase. So first, so there has been inverse inflation. So inverse inflation means EPS will decrease. So there is nothing to rectify over here. Just you have to understand the concept. Again, I am repeating. First, we have understand what is the buyback. Under second thing, first we have understood what is EPS. Under EPS, if I see the number of shares are in the denominator, if the denominator increases, the overall ratio will decrease. As simple as that. So that's why it's given the share of after buyback. EPS increases as I have said this. So answer is B. Now let's move to question 23. Hanji, that's what I have said, na, Nidish. I think there has been some miscommunication, but EPS will increase. That's what option B was all about. Even Nilesh has given the right answer for this. So now Sumit is saying it's 10 crore. Let's see who is giving the right answer. My dear friends, the correct answer is B only. First of all, you have to understand there has been a block deal. Under block deal, please remember that under this particular deal, we have to give a separate window because the volume of transaction is too much. So if the volume of transaction is above 10 crore, then I will be operating a separate window. Or if the number of shares is above 5 lakh, then also I will be operating on different windows which have been offered by stock market. There are two separate windows. First is in morning and the second is in evening or afternoon as well. In these two particular windows of 15 minutes each, I will be operating these two particular deals, which is also known as block deal. Under block deal, I have told you the conditions: 10 crore plus 5 lakh of share. There is also a deal which is known as bulk deal. Okay, but the under bulk deal, you all need to remember is 0.5% of the shares which have been traded in the market. This is the difference between block deal and bulk deal. But please also remember that under block deal, I will not be able to execute it under the normal market operations. Okay, so I will be needing a separate window, but under bulk deal, I can operate it under normal market operation, as simple as that. Okay, so bulk deal can be done between different in the normal window only, but if I have to operate a block deal, then I will have to use a special window, as simple as that. Now let's come to question number 24. Question number 24 is again regarding, I would say, equity only. It is a very easy question. All you need to do is just apply some basic knowledge. I can see maximum of you are going with C, primary dealers. Yes, my dear friends, the correct answer is C. This is very straightforward question, and this is the level of RBI Grade B questions as well, because they just want to check your concepts. Now, can you tell me a central counterparty which operates or which gives the platform for operating different government securities? Can you name that central counterparty on which different government securities are traded, or it is provided by which of the following institutions? It can be CCIL or it can be RBI, SEBI. Can I have the correct answer in the chat box? NDSOM. Okay, non-negotiative dealing system. NDSOM is just a way via which, yes, the correct answer is CCIL, Clearing Corporation of India. Negotiated dealing system is a way via which you can transact, but CCIL provides you the platform on which different I would say government securities can take place. Now let's revise what is NDM OM only. This has been in much in news as well because of different types of operations which are done by RBI. So all my grade B officers, what will be the correct answer for this? So till now we have covered the quarter of our session. What will be the answer for question number 25? I can see someone is saying 2005, or rather Vanshika is also saying it's D. Nikhil is going with C. Shubham is saying it's B or D rather, sorry. Okay, yes, my dear friends, the correct answer is D. All you need to remember is that it was issued in 2005 and this has been the function of NDSOM. Now let's go with question number 26. Again, a question on CCIL. This has been you can bifurcate this particular question in two parts. First is equity market and the second is financial institution as well. So these two are the common question from these two particular chapters. What will be the correct answer for question 26? Just read the question. You cannot skip such easy level questions. Jyoti is saying it's A. I can see some many of you are also going with C. Okay, we will see it. Yes, my dear friends, the correct answer is A, not C. See, this has been just a simple platform. CCIL provides us act as a central counterparty, and they help you in selling or buying different government securities. So the answer will be A only. And before moving ahead, is there any doubt regarding buyback? Can solve that particular numerical. I think there was some communication gap or a buffering as well. Please give me a thumbs up or please say okay. Under buyback, EPS will increase and PE will fall. Can anyone please confirm in the chat box? Okay, let's move to question number 27. Okay, Vijay, then we will take this particular question in the end. Let's not debate it right now. It will flow, it will disturb the flow of the lecture. We will discuss it in the end. Okay, I have noted this particular question now. Again, a very static level question. A very easy also, just wordplay is there. Please do not fall in the trap of wordplay. I am waiting for the right answers for question 27. Nikhil is saying it's B. Okay. Vijay is saying it's B. Sumit is saying let's skip this. Okay. Yes, my dear friends, the correct answer will be B only. As simple as that, nothing much to explain. Just remember, if you want to, if different parties are having different government securities, they have to deal with these two particular accounts. Now, this particular account can directly be opened with RBI, but this particular account will be opened with first, let's say, some third party which can be a primary dealer, and then CGSL will be opening. Then primary dealer will be opening this particular account with RBI. So you have to remember that under STL, all you can directly open this particular account. Not you, I would say some different financial institution directly with RBI. But under CSGL, you will first open your account with primary dealer, and then primary dealer will open this particular account with RBI. As simple as that. Option B is correct. Now let's move to different types of components of debt market. Now we have covered different chapters. Now we are moving to debt market. This question is regarding treasury bills. A very easy question. All you need to remember is that there are different types of treasury bills. We will be discussing about EPS. I think there has been some confusion. We will clear it by the end of this lecture. Don't worry. So I can see maximum of you are going with D. I request you all to please participate. Okay. Yes, my dear friends. The correct answer is D, because these are the different types of treasury bills which are issued, but there is no maturity of 191 day of T bill. Please remember this. Prachi is saying it's D and B. No, Prachi, the correct answer will be D only. You have to identify the odd one out. So there are three types of treasury bills, or I would say three maturities of treasury bill: 91, 180 and 364. In which 91 may the maturity or the auction takes place every Friday. Please remember this as well. Now let's come to D. I would say the correct answer is D. These are the three different types of treasury bills. Now let's move to question 29. Let's focus on question 29 now. Now this particular question, I know maximum will go wrong because they are not updated with the knowledge of treasury bills. Hitesh, I have taken all the questions from, I have personally made this question, so I don't find any mistake. But if there is any mistake, we will rectify it in the end of the lecture. I can see maximum of you are going with 25,000, or someone is also saying 10,000. Now those people who are remembering it old value, they will say again question wrong hai. But those who are updated with the knowledge, updated values, they will say question is right. See my dear friends, the correct answer is A. Those who are saying it's 25, see 25,000 pehle hua karti thi, but right now it's 10,000 only. Please remember this particular point. It's had, I can also show you different documents, or I can also show you the press release of RBI, the financial newspaper of Ministry of Finance. Also it's 10,000, it's not 25. The question galat nahi hai. Please update yourself. Hanji, so now we will coming to question 30. I am not reading different types of, I would say, explanation, because it will just take, or it will be a waste of time. Rather, you can read it by yourself when you are revising. PDF of this lecture will be available on our Telegram group. I can see those who have given 25,000, now they are leaving the session. This is how it happens. You have to be updated, unless and unless, if you are not updated, then it can go. Here I am asking the maturity of cash management bills. What is the maturity of cash management bills? I'm not asking the maturity of treasury bills, I'm asking the maturity of cash management bills. Yes, my dear friends, the answer will be none of the above. It will be 91 days, or less than 90 days. It can be also be the above, but for to be specific, 91 days will be the correct answer. Question number 31. Again, I am betting you here that there will be a, I would say, difference of opinion between me and yours, because many of you are not updated regarding the current knowledge, and you will see difference of opinion here as well. I can see someone is also saying D, or many are also saying it's B. Let's see what's the correct answer. Hanji, my dear friends, the correct answer is 5 lakh only. Please remember this. This has been updated recently even by RBI only. So there has been no confusion regarding certificate of deposits. Now, can someone tell me uh, what is the maturity period of certificate of deposit? What is the maturity period of certificate of deposit? Minimum and maximum both. Let me make it very specific. What is the minimum as well as maximum maturity? Sumit is going with 14, Vanshika is going with 364. Hanji, 1 year or 364 are same. So minimum has been 7 days and maximum it can be 1 year. So please remember this. This is also a very important component of your syllabus. Now let's come to commercial paper. We are moving to different components of debt market. We have covered different points till now, but let's now cover about question number 32, commercial paper. What will be the correct answer for question number 32? Vanshika is saying it's D, Sumit is saying it's E. All of the above are correct. Please read the question carefully, then only you will be able to answer this question. Yes, my dear friends, the correct answer is D. Commercial papers are not for long term. Please remember this. This was the wordplay again in action. Please remember this. Commercial paper is for short term loan only. Now, someone please tell me what is the denomination value of commercial paper? 1 lakh, 2 lakh, 3 lakh, 4 lakh, or 5 lakh? Hanji, RK, you have given it very much correct. What is the denomination value of commercial paper? It's 1 lakh, 2 lakh, 3 lakh, or 5 lakh. Denomination value of commercial paper. 4 lakh. Okay, we will see. Vanshika is saying it's 5 lakh. Okay, we will see. Yes, the correct answer is 5 lakh, not 4 lakh. So please update yourself. Now let's go to question number 33. This is from your commercial bills. Different questions, different concepts. Pashuram is saying it's 2 lakh. No, it's 5 lakh. Please update yourself. Hanji, so let's wait for another 20 seconds for this question. A very easy question. All you need to remember is what is usance bill and what is demand bill. So I have started getting the answer as C, D. Okay, we will see what is the correct answer. Vanshika is also saying it's D. So I can see maximum of you are going with D. Now Vanshika has changed this answer to C. Okay. Nikhil is also going with D. Yes, my dear friends, the correct answer is C, not D. So Kudos to those who have changed their answer. See, demand bill, you will be paying the demand bill at site. Under usance bill, just remember this. Now let's move to question number 34. A very easy question, and this is a very important part even of MPC syllabus. Question number 34, I am waiting for the right answers. A very conceptual question rather. Nothing much to get confused. All of the above statements are correct. Vijay is saying this. Luna, RK, Ahmed. Yes, my dear friends, all of the statements are correct. Very easy. Under money market, you can have overnight money, notice money, and term money as well. So let's see different types of money market. Nothing much to explain. All you need to do is some different analogies. As simple as that. Now let's move to question 35. CBLO. What is the maximum or the minimum E? Maximum maturity under CBLO. CBLOs are for different market intermediaries who cannot use call market. Hanji, so what will be the right answer? Will it be A, B, C, D or E? So B is the one who is starting with the, I would say, answer tally. Vanshika is saying it's D. See, don't get confused between C cash management bills and CBLO. They both are different. Under CBM, we have 91 days. Now again, Vanshika has changed its answer. Skip. My dear friends, the correct answer is B. CBLO में maximum you can buy for 1 year only. As simple as that, nothing much to explain. All you need to remember is those people who cannot borrow in call money market, they come to CBLO for borrowings. Now let's come to question 36. This is not a numerical. This is just a concept. Numerical नहीं है, concept ही है बस. I'm waiting for your answers. If you are targeting your phase 1 correctly, the quant part, then this question can be answered just in 5 seconds. Let me write the formula. And here I think we should also clear that particular doubt regarding EPS and PE under buyback. So just give me 5 seconds. I will be just writing the formula. Hanji, the correct answer, if you just have to apply this formula, you just have to remember the one formula which is EPS, which is earning divided by numbers of shares. Earnings is 10,000 rupees divided by number of shares, which is 100, and this is the level, my friend. This is the level of numericals. But what we generally do, we leave the numericals thinking that it will be very hard. So please be safe and do not leave such numericals. See, first of all, just give me 2 more seconds. I will be just clearing the doubt. See, under buyback, number of shares which we have taken back from the company. So number of shares outstanding, I would be adding the word outstanding, would increase rather, or I would say decrease, sorry. So if this is decreasing, that number of shares which are in the market are decreasing because I have purchased those shares back from the company. So EPS will increase. I think previously I have made a mistake and apologize. Number of shares will decrease, so EPS will increase. As simple as that, inverse relationship. Now if EPS is increasing, this is price to equity ratio. Under price to equity ratio, this is also known as current market price divided by EPS. Now if my EPS is increasing, then my PE will decrease. Again, inverse relationship. Nothing much to explain. All you need to do is just remember that number of shares will be decreasing. As simple as that. Now I think that particular doubt is cleared, that under buyback EPS will increase and PE will decrease. Simple. And I have just told you the different methodologies as well. Now let's move to question 37. Now we are moving to mutual funds. We have covered equities, we have covered debt, we have covered derivatives. Now let's cover question number 37. This particular session will be your revision session. It's not like I am telling you all the concepts right here. So now let's wait for correct answer for question number 37. So A, B. Three tier. Okay, now time to reveal the answer. This is very much easy. Question number A. The answer is A only. You can also add this sponsor, or sometimes are also known as promoters. They start the particular business and they apply a trust. Trust can be also be known as board of directors in an informal language, not that much. And at the trustees, this is also known as asset management company. The main role of asset management company is to manage the mutual fund business of the particular company. As simple as that. For example, if Kotak is there, so you can say that Uday Kotak can be here, or I would say Mr. Uday Kotak rather, is the one who is the sponsor. He will establish a trust, and under trust, he can also establish AMC, the Kotak AMC. The Kotak AMC will be launching different schemes or different products of Kotak Mutual Fund. As simple as that. Question number 38, again from mutual funds. Question number 38. A very easy question, and I think it's a tough nut because those who are reading the concepts diligently, they will be only able to answer this question correctly. This question can also be referred to as challenge question. RK is saying it's A. Okay, we will see it. Yes, PDF will be available in the Telegram group, but I think PDF will not be able to. I think it's D. Okay, someone is saying it's D. Martin, Shubham, Vijay. Nikhil is going with E. So can someone tell me if the answer is D? Chalo, I am revealing the answer is D. What is wrong with statement B? What is wrong with statement B? My answer to you is this. Let's not do. What will be the answer if what is the wrong regarding statement B? Can someone tell me? The NAV of scheme except fund of fund scheme needs to be published fortnight. Yes, Nikhil is saying it's, or even Vijay is given a right answer. It's daily basis, not fortnight basis. As simple as that. The answer is D. Now let's move ahead to question 39. This is also regarding mutual fund, and this ELSS concept was also there in SEBI phase 1 as well as in phase 2. So this is a very important component. Actually, they need to publish it, but they need to publish it daily. So that would be a correct explanation rather that they do not have to publish it all together. And so what will be the correct answer for question 39? A very easy question, just apply the basic concepts. Hanji, my dear friends, it's A only because incorrect it's 1.5 lakh under section 80C if I'm not wrong. Then let's move to question. This is a very easy question. Please remember that under ELSS, it offers you twin advantages. First is investment and the second is tax saving as well. So this is the twin themes of ELSS. Now let's move to question 40. This is also a tough question according to me. By tough, I mean it's 2.5 times the RBI level. So if you are able to crack it, then definitely you are doing good. Hanji Nikhil, it's 1.5 under section 80C only of Income Tax Act 1961. Hanji, so who will be giving me the right answer for question 40? Please focus on different words. That's the first, I would say, hint for this question. Concepts. I can see first answer is coming from Marty and it's E. Vijay is saying it's A, or I should say C. Again EC. Okay, Luna is also going E. Okay, Vanshika is going with B. ECB. England Cricket Board. My dear friends, the correct answer is E. So kudos to all those who have given it rightly. See what is wrong with A? This will be a debt fund. Moreover, when there is only thing which has been there in the question, please ask yourself, is it true or not? So there has been something which only with the word only. It's like pessimistic words. So now let's come to question 40. The answer is E. Monthly plans or monthly income plans are a type of hybrid funds, or rather than they can be debt funds as well, or which invest in debt as well as in equity. So please note this particular session. Now let's come to question number 41. Nothing much to explain in that question because it's just a journal language. Question number 41. You have to select the incorrect statement. Please read this word and then answer your questions. Again, this is a moderate level question. This is, I would say, 1x of RBI level. Martin is saying it's C. Luna, it's totally your call. According to me, you should have to cover it because mutual fund is very hot topic. Many FIIs and different types of investors. It's very much in news, and all these are very easy question. I'm not asking that much deep as well. Yes, my dear friends, it's C because close-ended funds are not more liquid because it's open-ended funds which are more liquid rather than close-ended fund, and SIP, which is also known as systematic investment plans, are not allowed. So this will be a correct statement, are not allowed. All these are different types of mutual fund which is open-ended. Under open-ended you will not find any date. Units of close-ended scheme are mandatory listed on stock exchange. This is also correct. Under interval, and interval can be a type of open plus close. Hanji Sumit, open-ended funds are more liquid. Now let's come to question number 42. This is also tough. RBI has been infamous, or I would say notorious, for asking questions based on short forms. I think this is the second last question of mutual funds. Then we will move to different chapter. We are taking different chapters based on RBI syllabus only. Till now, TVM, bonds, derivatives, different types of derivatives, options, FIOPs, warrants, different types of derivatives have been covered. Equities, debt, they have also been covered. Currently, we are doing mutual funds. Now, what will be the correct answer for question 42? Okay. Scheme information document. Nikhil is saying it. Martin is saying it's Sai. This is a knowledgeable question, please take it. Offer document, more if a new, like for companies we have IPO, but for mutual funds we have NFO. This is new fund offer. Under NFO, for example, let's say correlate with the IPO. Under IPO we issue different types of prospectus which we have just covered up, but under NFO we covered different types of offer document. So the offer document can be divided into two parts. The first is SID, the second is SI. SID stands for Systematic Information Scheme Information Document, and SI stands for Statement of Additional Informations. And all the related information regarding scheme is available over here, but all the statutory information will be available over SI. So this is the correct answer, A. And now let's finish this particular chapter mutual fund with this question. You all need to tell me what is the summary form. Summary form of SID and SI. Simple. What is the summary form of SID and SI? Kirtiman is saying repeat once, please. Kirti, you can watch this session later because I think it will disturb the flow. But chalo, still, SID is scheme information document. Under this particular document, you will find all the related information regarding scheme, regarding the mutual fund scheme. Under SI, it's also known as statement of additional information. Under this particular thing, you will find all the statutory or the legal information regarding mutual fund. The summary of these two. Now, my question two is it's key information memorandum. Yes, the answer is B. Please remember this. All the mutual fund summary is available in this document. Now let's come to last question. I would say this is the last question, rather not last. Now this is regarding the NFO. This is the last question. Last question from ELSS. ELSS is really very hot topic because many non-institutional investors, many foreign institutional investors, they invest maximum in these schemes. I'm waiting for your answers. Then we will move to the next chapter. I think it's related to financial inclusion. I can see Vijay saying it's E. Okay. Martin has given a skip. I know this is a tough question, but initial offering in the case of ELS is open for 30 days. As simple as that, nothing much to explain, just a factual question. And this is regarding the riskometer, which has been released by SEBI. This is also a very important component of your syllabus. Financial institutions, chapter plus, or you can also say recent developments. This has been updated recently. Many people don't know the correct answer for this. So someone is saying it's 7. How many categories of risk are there? As simple as that. I can see maximum are opting for C, or someone are also saying skip. The correct answer for this particular question will be 6. These are some different types of risk which is present over there. As simple as that. Nothing much to explain. You all need to remember that this particular is also riskometer. It's like speedometer what we have in our cars. Now let's go to question number 46. Question number 46. This is relatively very easy. This is 0.5 times the RBI level. You can easily crack this if you have the knowledge of different plans. I'm waiting for the right answers for question 46. What will be the right answers for question 46? Will it be A, B, C, D, E, whatever? Only statement B and C are correct. Sumit and Martin are going with C. Yes, my dear friends, the correct answer is C because it's systematic transfer plan, not transition plan. Karan has also given the right answer. Even Vijay has given the right answer. Now we are moving to alternative sources of finance. A very important chapter regarding the recent developments of P2P will be covering over here. So now it's regarding franchise. So you will have to tell me regarding what is the correct answer for question number 46. What will be the correct answer regarding question number 46? MK is saying it's option C. Let's see what is the correct answer now. Question number 46. What will be the correct answer? Wherein a franchisee provides management expertise, format, procedure, and conducting the business. Vijay is also going with C. Just read the question, it's very much easy. Sumit is saying let's wait. This is very easy question. Yes, my dear friends, the correct answer is C. These are some different types of franchise. Under product franchise, we give the trademark. We also give the product specialization to companies, those who are opting for franchise. Under, for example, Coca-Cola. For example, now let's come to business format. Under business format, I will be giving up all the business procedure. For example, MACD. For example, Domino's, you see all the different outlets look same. Under management franchise, I will give the consultancy services. As simple as that, nothing much to explain from now. So these are different types of franchise. Now let's cover to question 47. This is regarding crowdsourcing, crowdfunding rather, or crowdsourcing. Identify the type of crowdfunding where the entrepreneur sells a product or a service to launch a business concept without incurring a debt or sacrificing equity. What will be the correct answer for question 47? Sumit is saying it's B. Nikhil is also going with B. Vijay started with A. Okay. Martian is also going with B. Vanshika is also going with B. Karan is saying it's A. Rubal is also going with B. See, the keyword is without incurring debt or sacrificing equity. But under equity, you will be sacrificing it. So there cannot be the right answer. B cannot be the right answer. Therefore, A is correct. Debt based is as same as P2P lending. Litigation based, you have a common lawsuit. That will be important for litigation. The correct answer for this will be A, and kudos to all those who have given the right answer. So A is correct for this. Okay. Now let's come to question 48. Question 48, this VC refers to venture capitalist. Now you will have to tell me the incorrect statement. What will be the incorrect statement in question number 48? Please be active. All your concepts are testing right now. They are in the test phase rather. I can see C and D are taking much of the contention. My dear friends, the correct answer is C. Angel investors are active? No, they are like passive. They just give the funds and they let the startup operate by its own self. Rather, venture capitalists are more active and they take active participation in the business as well. Now let's come for revision purpose. I have added the difference between angel as well as the venture capitalist. Now let's come to question 49. This is very important regarding P2P firms. This is very much in news and it can be a potential question in your phase 2. What is the minimum net own fund requirement of P2P? Earlier there was no regulator of P2P, but now RBI is the regulator for P2P. Please remember, all the P2P have to be NBFC. Now I can see maximum of you are going with B. Sumit is saying it's A. Fainky is also saying it's 10 million. My dear friends, the correct answer is 20 million. Nothing much to explain. 20 million can also be said as 2 crores. Okay, so this has been the regulation which has been released, and this is directly taken from RBI screenshots only. It was released in 2017 although, but these recently have been updated. Most important, not less than 20 million. So please remember this particular figure now. Question number 50. We have reached to the half truth stage. Sumit, as per the best of my knowledge, it's 20 million only. But if there is any update, I will let you know in the comment section only. Now, this is regarding the leverage ratio of P2P. Leverage ratio of P2P firms. See, this is also very factual knowledge. Please remember the leverage ratio cannot be more than 2. This is also very factual question and you have to remember all the regulations regarding P2P firms. This was in news, I think. Now question number 51. Now we have entered into the territories of financial inclusion. Till now I think we have covered 6 chapters if I'm not wrong. Now we are entering into financial inclusion. This is a very easy question. All you need to remember is what is the financial net of financial inclusion. Maximum of you are going with E. Hanji, my dear friends, the correct answer is E only because all these fatalities becomes a part of financial inclusion, but subsidies which are given are not a part of financial inclusion because subsidies are a type of transfer payments. Or you can also say subsidies will not result into the production part. So this has been an explanation which has been added for you. And please remember this particular report also, if you can, like don't read the whole report, but Rangaranjan committee was very important for financial inclusion. You can also use this particular diagram or you can also use the different components in your descriptive part. Now let's cover different types of ATMs. This can be a potential question in phase 1 as well. Most important, this is a part of banking awareness as well. Please remember this. I can see E, C. Yes, my dear friends, the correct answer is white label ATMs. Please remember the difference between white label ATMs and brown label ATM. This was the question which was asked in my interview as well in RBI. So white label ATMs are those ATMs which are operated by different, or I would say different private parties. But under brown label ATM, bank as well as the third party comes into a type of a contract. So bank provides all the cash services, but the maintenance is provided by the third party. Orange label ATM is related to share transactions. Pink label ATM is related to women empowerment, and green label ATMs is available to agriculture. There is also an ATM which is known as yellow label ATM, which is also related to e-commerce. So these are different types of ATM. Now let's come to question number 53. What can be regarding the RTGS question? Hanji, it was Tata Telecommunications. I can see Martian is saying it's E. Sumit is saying it's E. Okay. Anji, the correct answer is E. There is no limit. This is the correct answer for this. Now, my dear friends, please tell me what is the upper limit, or I would say upper limit for IMPS, immediate payment service. What is the upper limit for this particular channel of payment? This has been updated recently in October 2021. So this also forms a part of your current affairs. Minimum 2 lakh. Under RTGS minimum 2 lakh, but under IMPS I am talking about, yes, it's 5 lakh under IMPS. Under UPI, what is the maximum amount of transfer which can take place in one go? Under UPI 2.0 rather. UPI has also been updated by NPCI. UPI 2 lakh is the correct answer, not 5 lakh. NPCI was formed in which year? My next question to you is NPCI was formed in which year? Take any option from 2005 to 2010. It's 2008. Please remember this as well. This is also very important. Now let's come to question number 54, again from financial inclusion part. Very factual based question rather. Let's move to question 54 now. What will be the answer for question 54? What will be the answer for question 54? Come on everyone, please participate. It will be Alliance for Financial Inclusion. It can be used in your descriptive part as well. Yes, the correct answer is Malaysia. Kuala Lumpur, Malaysia has been the headquarter of Alliance for Financial Inclusion, which was started by Bill and Melinda Gates Foundation. Now let's come to question number 55, the tough question I would say. Provided that your concepts are not that much strong, then it's tough. I can see now maximum of starting answering different questions. Manisha Soni. I am an aspirant rather. Yes, my dear friends, you have to identify the false statement regarding difference between self-help groups and microfinancial institutions. Yes, the correct answer will be B, because SSG has been a group of more than 10 and less than 20, but the size of joint liability groups, or you can also say joint liability groups, it's 5 to 10 only. Now let's move to different question, which is also known as question number 56. This is the question which is you can see in phase 1. You can also see this question related to banking awareness, and this is like evergreen topic. Hanji, SSG have 10 to 20 members, but in difficult terrains like hilly areas, that can be 5 to 20 as well. I can see active participation now. Now please answer question number 56. I can see Nikhil is saying it's 9. Martin is saying it's 8. 8 broad categories. Okay. Vijay is saying it's 5. Okay, we will see Vijay. This is really very important topic. This is by far the most important topic of the syllabus. My dear friends, the correct answer is 8. Total PSL. Or let's discuss it on the next slide. First of all, the answer is 8. All these are the 8 categories. The total PSL by scheduled commercial bank has to be 40% of the net bank adjusted credit. For small financial bank, it has to be 75%. For RRBs, again 75%. This is total. Out of this total, agriculture will constitute 18%, MSME will constitute 7.5%, and all these you have to remember by Magigam only. Under agriculture, 10% is available to small and marginal farmers. Okay, so this is a subpart of 18%. Moreover, out of this total, you have to remember weaker section as well. Under weaker section, it will be 12%. So this was just a small summary type of PSL. And this is very important topic, and you should cover it for your phase 1 and phase 2 as well. Now let's come deep into financial inclusion. This is financial inclusion, rural development. What will be the answer for question number 57? Rural self-employment training institutes fall under the ambit of which ministry? Rural self-employment training institutes, receipts. This is Ministry of Rural Development. This is Ministry of Health and Family Welfares. This is Ministry of Education, which was previously known as Ministry of... Hanji, I think it was a slip of tongue from my side. It is Ministry of Rural Development only. It's not Ministry of HRD or Ministry of Education. It's not Ministry of Corporate Affairs as well. It's Ministry of Rural Development. Currently, I think it's headed by Nitin Tomar. Now let's move to question number 58. Question number 58. Maximum of you are will be going, I think, on a wrong way. But let's see what the result is. Rural is now saying it's A. Vanshika is also saying it's A. Let's see what the correct answer will be. Lead District Bank Scheme, yes, 1969 launched. Sapna, I think your query is not cleared. I can see that maximum of the answers are hovering between A to D. Someone is, Martin is saying it's B. See, first of all, remember the answer, it's E. That's how you have to remember it. See, first of all, there are two documents which have been released, and this is very important. That National Strategy for Financial Inclusion is from 2019 to 2024. National Strategy for Financial Education is from 2020 to 2025. Please remember these two documents. These are like backbone for financial inclusion. So if RBI has given financial inclusion in your syllabus, then these two documents are like lungs of that particular chapter. I again repeat, National Strategy for Financial Inclusion 2019 to 2024, 5 years. This again has been launched for 5 years. National Strategy for Financial Education 2020-25, 5 years. Very much important. Now let's see the answer. It's E only. Please recommend all these 5 C's as well. These are really very fodder material as well for descriptive part. Tricky question. Thank you. Now question number 58. Again, a very easy question, and this can also be in descriptive part. Again, I am seeing if it comes, if a topic is there regarding financial inclusion or anything, then this particular question will also be a fodder material. What will be the correct answer for question number 59? Currently, we are on financial inclusion. Then we will be moving to different chapters. Again, wordplay. Wordplay is there. Please mention it. Please read it carefully. Wordplay can snatch away 2.5 marks from your kitty. Yes, my dear friends, the correct answer is B. Can you tell me, there has been a, I would say, initiative from RBI which is regarding CFL. So what is this full form of CFL? Like there is FAME, there is also CFL. Can someone tell me the full form of CFL without using Google? So you will have to tell me the full form of CFL. Can someone please tell me it? See, CFL stands for Center for Financial Literacy. Financial literacy. This has been a term which has been used in the RBI report from the previous year. So you will have to remember that CFL, RBI is planning to establish 100 CFL in different districts by 2024. The Center for Financial Literacy. This is a very important learning, I think. Now this is regarding your digital payment index. Again, a very important part of financial inclusion plus recent developments. What will be the correct answer for question number 60? Correct answer for question number 60. Very easy question. It can be there in phase 1 as well. Alok is saying it's 2018. Yes, my dear friends, it's E, 2018. This is very much easy. All you need to remember is, can you tell me how many pillars are there and how many parameters, or I would say indicators rather. How many pillars या फिर parameters are there and how many indicators are there? Can someone tell me this? Three pillars. Access, usage and quality I think you are referring to, but I am asking about parameters. I think there are five parameters. Yes, Sumit has given the right. There are 26 indicators, not three, I think. So let's check this, and if I am wrong, then I will pull it in the comment box. But according to my best of my knowledge, there are five parameters and 26 indicators. Now let's move to question number 61. Now we are moving to PPP. So we have covered different chapters. Now we are moving to different chapter, which is also known as public-private partnership, rightly mentioned in your RBI syllabus. What will be the correct answer for question 61? Very easy question. This is like 0.5 times of RBI. Sumit, let's move to the next question, I would say. I can see Vijay saying it's A. Nikhil is saying it's D. Okay, we will see what's the right answer. In next half an hour, we have to finish the lecture. Yes, my dear friends, the correct answer is D. All you need to remember is that private firm or consortium finances half of the project and major performance standards has been set by the government. As simple as that, nothing much to explain. There is also a model known as HAM, Hybrid Annuity Model. This particular model is being used in which domain? Can you please tell me whether it's highway, whether it's ports, or whether it's road development, or I would say whether it's educational, social. Can you tell me what in which particular department I will use this particular model, hybrid annuity model of PPP? In which particular business domain I will be using HAM model? It's educational, social, highway development, ports and highway. Okay. See, the main answer will be highway, but it can be used in ports as well when it comes to the practicality part. Okay, now let's come to question number 26, again from PPP. PPP has been a very favorite chapter of RBI. Now you will have to tell me about viability gap funding scheme. What is the maximum amount by which government finances? This is the key term. I'm not asking you the total part. I am asking you the part which government finances out of the total. Hanji Nikhil, it's highway only. Infrastructure can be right as well, but I would say you have to be specific. Vijay is saying it's 40. Can someone else confirm? Sumit is saying it's A. Prachi is also saying it's E. Maximum amount which via government, please focus on this point. 40% of the total project cost is the total which has been taken by government plus the concerned party. But the government contribution will be 20 only. So the right answer will be 20. If I ask you the total, then it will be 40. If I ask you the share of 20%, that will be also of concerned party. So please remember this. I have specifically mentioned about government over here. Now let's move to question number 63. This is regarding public-private appraisal committee. What is the level of projects which has to require a permission, prior permission of PPPAC? Hanji, so here the answers will be again, I think, confusing, or I would say rather, Fenki has given the right answer. Nice name, by the way. Vijay is saying it's 200 crore. Let's see. Yes, my dear friends, the correct answer will be D. But please remember it, if the highway or ports project is there, then this value will increase to 1000 crore. But for normal projects, it's 100 crore only. Please remember this. Now let's move to question number 64. Again, a static level question. A very important rather in the field of PPP. All the committees and different types of thing are really very important. We are off to question number 64. I think the next chapter is awaiting for you all. So be there with me for next half an hour as well. Today we are doing an awesome job by revising all the chapters. So Vijay is saying it's D. Nikhil is also going with D. Let's wait for another 5 seconds for the right answers. Yes, my dear friends, the correct answer will be D only. It's Vijay Kelkar. Now let's move to Forex. We have covered PPP, financial inclusion. Now let's move to Forex. Who will give me the right answer for question 65? I know maximum people will be able not be able to give the right answer for this question. Take it as a challenge. Nikhil is saying it's D. Okay, we will see it. Samar is also going with D. Vijay is also going with D. Nikhil is again changed to B. Okay. Yes, my dear friends, the answer of this particular question will be Tom, which is also known as tomorrow. Please remember this under ready or cash. This ready is also known as cash. The settlement takes it on the same day. Under spot, we have T plus 2, which has now been shifted to T plus 1. Forward is also known as delivery. You will go in the future. So the answer for this question will be D. Now let's move to question 66. Which of the following, this is regarding your, I would say, changing landscape of banking sector. Now we have moved up to a next question, I would say, or I would say next chapter rather. Please tell me which committee has recommended the bank's board of bureau. This is, can be also been added in your banking awareness, which can be seen in your phase 1. PJ Nayak committee. Someone is saying it's PJ Nayak committee. Cannot it? I am getting maximum answers as PJ Nayak committee. See, this committee is based on PPP reforms, which we have covered right now. Vimal Jalan committee is economic capital framework. Umesh Sinha committee is based on MSME. It's PJ Nayak committee, which was based on banking reforms, which was set up in, if I'm not wrong, it was set up in 2014. Okay, so now let's, the question is very much clear. Yes, it was set up in 2014 only. Now let's come to a very important topic regarding regulatory sandbox. This is also a very important component, and in 2021 phase 2 there was a question regarding this as well. So what will be the answer for question number 67? How many stages are there or phases are there in the regulatory sandbox? This has been the initiative of RBI, where RBI allows different startups to hit and try their products. Luna is saying it's 4. No, it's not the right answer, Luna. I request you to please reattempt it. Keep reattempting until you get the right answer. That will be a more beneficial approach. My dear friends, the correct answer will be C5. There are 5 stages under which the regulatory sandbox thing happens. These are the different 5 stages and these are the duration, and what happens between these is given in the description or I would say in the explanation box. Now let's move to question 68. Now we are moving to inflation. So now I think we have covered more than 12 plus chapters today itself. So now who will give me the right answer for question number 68? I'm waiting for your answers. Don't be a potato in my class. Let's participate. I know you all are tired today, but let's work more. I can see Vijay is going with C. Okay. Identify the type of inflation where the inflation occurs when the firm respond by rising cost. Okay, so Vijay is saying it's C. I can see Nikhil is also going with C. Luna is also going with C. Yes, my dear friend, the correct answer is C. Under demand pull of inflation, AD, that is aggregate demand, becomes too much. So the answer will not be D, will not be A rather. Under cost push, the cost push means that the prices of the raw material increases, which indeed forces our suppliers to increase the prices. The answer is C, yes. Now let's come to question number 69. Again, a very important question, and I know maximum of you can make a mistake rather. This is also regarding inflation, different concepts of inflation mentioned directly in your RBI syllabus. Anji, who will be giving me the right answer? Prachi is going with C. I will be waiting for your answers. Please read it carefully. Let's wait for 40 more seconds and then see who gives the right answer. What will be the right answer for question 67, 69? I'm waiting, guys. Please comment in the chat box. So Samar has said it's C. Okay, we will see it. Samar is going with C. No, my dear friends, the correct answer will be A, because I have switched the sides of disinflation and deflation. See, first of all, you have to remember this particular thing. Only A. Now I can see answers have started coming in. Only A is correct. Why? Because if inflation means rise in the journal price level of the goods, but let's say a commodity of rupees 100, today it's become of two different situations. Let's take it, it's 80. So now the prices have reduced. This is a situation of deflation. Okay, but from tomorrow onwards, let's say if it becomes 120 and later it's become, let's say 132. So here the price increases of 20, but here it's 10% only. So inflation is still positive. This is a situation of disinflation. But the opposite of inflation will be deflation, not disinflation. Please remember this. The answer will be A. Question number 70. Again, we are going into inflation zone only. Question number 70. Statement C is not correct. Okay, I will see to it, Summer. Let's first see the question number 70. Or rather, let's go on deflation is a condition. See, this deflation may inflation will be negative because prices go down. So I hope Summer your doubt is clear now. Let's now focus on question 70. A very big good concept check question. If your concepts are really clear, then it can be a cakewalk for you. Agnik is saying it's B, inflation accounting. Yes, my dear friends, it's B only. All you need to do is just look to the question, understand the level, and you can definitely mark the answer. Now, question number 71, which is like a famous question of application. You will have to apply your different knowledge from MPC and inflation. What will be the correct answer for question number 71? You will have to understand the concept of money supply and the relation of money supply with inflation. Here V refers to RBI. I can see Vijay saying it's B. Nitesh is also going with V. This is a part of OMO, Open Market Operations. Maximum of you are going with C. Yes, my dear friends, the correct answer will be C. Just remember this, if inflation increases, then money supply has to be reduced. If it is not reduced, then it will further induce more and more inflation. So first remember this, that for inflation if we have to control inflation, then we will have to reduce the money supply. Statement 1 is itself a very blunder, I would say. So statement this one is not correct. To reduce inflation, RBI will decrease repo rate. If RBI decrease repo rate, then the chain reactions, if you understand the chain reaction, then money supply will increase. So this is also not correct. Statement C is correct, because if you sell securities to investors, if you sell the securities, money will be pulled back. So money will come back to RBI. So I hope this particular table is also provided for you to revise. Please remember this. Question 72 regarding WPI. I can see from previous question, many of you have got confused, and C, E, different answers are coming. Now let's wait for the right answers of question 72. Vijay is going with E. Okay, we will see it. Agnik is also going with E. Luna is going with D. See, the correct answer will be E only, because wholesale price index has three categories of good. So this statement becomes false. These two are correct. There are three particular categories. First is manufacturing, second is primary, and the third is fuel and power. Manufacturing, approx 64% of weight is given to manufacturing only. Rest all is correct. Can you please tell me the committee which has been recently set up in 2017 and the recommendations were out recently only, which has suggested to change the base year of WPI to 2017? Can you please tell me the name of that particular committee? Or you can also tell me the person who was heading that committee. Again, a very good level question, I would say. Can someone tell me the name of that particular person? Can someone, or I should reveal the name? It's Ramesh Chand. Ramesh Chand committee has been set up for bringing such changes under WPI, and they have recommended to change it the year of base year of WPI from 2011-12 to 2017. Please remember this, it can be a important information. Now let's move to 73. Again a very big question, rather the most easiest, I would say. Now let's see who answers question number 73 as correct. You have to identify the incorrect statement, please mind. What will be the correct answer for question number 73? A very easy question, I would say. I'm waiting for your answer. Vijay is going with C. Okay. I think now I have started gaining the momentum of this question. Yes, my dear friends, the correct answer is E, because RBI uses CPI combined, not CPI ruler for inflation targeting. So please read all the questions carefully. Now I can see many people are deleting their messages, but in exam, if you have marked the answer, then you will be moving to the next question. So please read all the questions carefully, and this is very, very much important, the difference between WPI and CPI. Okay. So this has been a very much important explanation slide for you. Question number 74, theory of inflation. The most, I would say, confusing question for all of you. Hanji, so who will give me the right answer for question number 74? Question number 74 regarding theory of inflation. A very easy question. All you need to do is just read and understand the demand of the question. Nikhil and Vijay are going with B. Luna is also going with B. Okay. Yes, my dear friends, the correct answer is B. See, first let's discuss about different theories. The market theory says that there will be a cartel, or I would say monopolistic theory. For example, the fuel, they will directly increase the prices. Currently, it's $110 per barrel. So market power theory is regarding that only, that there will be some monopolistic who will definitely increase the prices. Conventional demand pull inflation says that there is always demand pull inflation. Aggregate demand will always be more than aggregate supply. Structural theory says that there will be some structural changes which can push the inflation. So the correct answer here is B. Now let's move to question number 75. Very easy question, nothing much to, this is a very famous question rather. Question number 75. Vijay is saying it's B. Yes, my dear friend, the correct answer will be B. According to Phillips, he means to see that the inflation and unemployment are two negatively correlated things. If inflation increases, then unemployment will decrease. That's why we have a negative sloping demand curve. As simple as that. Now let's come to question number 77. This particular question has been handpicked from NABARD Phase 2, 2021. Okay, so now you have to tell me which recently banking regulation amendment. This is regarding recent developments, and anything which is coming in the regulatory bodies domain, you have to cover it obviously. Just read it. You can easily answer it via reading as well. Anji, who will give me the right answer for question 77? Just 20 more questions after this, or I would say after some time, and we will be able over with all the chapters. Right now, we will have to discussing about global financial crisis, risk management. All these chapters are in the bucket. What will be the right answer for question 77? Come on, people, do not lose your energy. Vijay and Vishnu are going with E. Okay. Anji, the correct answer will be B. See, even I was confused for some time when I was reading it because of the passivity. But see, there has been a recent amalgamation in the Banking Regulation and Ordinance, which is 2020-22, and it has changed the Banking Regulation Act of 1949. Okay, so there has been some changes under this particular act via this ordinance. With this ordinance, the Banking Regulation Act has been amended to the primary. Now, all these primary agriculture cooperative societies cannot use the word. Please mind my language. They cannot use the word bank, banking, or banker, because these are now outside the purview of Banking Regulation Act. The ordinance provides that cooperative banks may issue. Yes, it has been an issue, because if you see the fallout of Punjab and Maharashtra Cooperative Bank, they were allowed to issue the more and more equity shares after this ordinance only. Statement 3 says that cooperative banks are not allowed. This statement is wrong. Now they can also issue debentures. That's why the answer was B. Also, please make sure that via this statement or via this ordinance, urban cooperative banks have been fallen under the domain of RBI. Earlier, they were under the domain of state governments. Moreover, there has been a question in NABARD phase 2 as well, that section 45A of this particular act has been amended specifically because now RBI has the power to amalgamate different cooperative societies with different banks. If you have any problem, please read on Punjab and Maharashtra Cooperative Bank. After this ordinance, RBI was able to amalgamate it with the two different entities. Now let's come to question number 78. Very important question on FSDC. Question number 78. FSDC was formed under which year? I'm waiting for your answers. Please comment it. My dear friends, the correct answer will be statement D, or I would say it was formed in 2008 after global financial crisis of 2010, or I would say rather 2008, sorry. After the global financial crisis of 2008, a committee was formed, a committee mooted idea of FSDC. This was Raghuram Rajan committee, which mooted the idea of creating FSDC. For his most important thing, the head committee of FSDC is headed by finance minister, as well as the subcommittee is formed by subcommittee is headed by the governor of RBI. So please remember, there are two committees under FSDC, which you generally see in the newspaper as well. The main committee is headed by the finance minister, and the subcommittee, please mention the word subcommittee, is headed by the RBI governor. Please remember these terms as well. Now let's come to question number 79. This is Financial Stability Report. Recently 24th edition of Financial Stability Report was released. So this will test your concepts in the best holistic manner as possible. A very easy level question. All you need to do is just identify one incorrect statement out of all these three sets. What will be the correct answer for 79? I'm waiting for your responses. What will be the correct answer of question 79? Come on, people. After this, only 20 more questions to go. Many are going with E. Yes, my dear friends, it's E only because Financial Stability Report is published on semi-annual basis. You will see two editions every year. Now let's come to NBFC Factors. Very important. This question has been directly taken from RBI website, RBI notifications, or whatever you call it. Question number 80. NBFC Factors. Question number 80. There was P2P, NBFC P2P. Vijay is going with C. Samar is saying it's E. No, my dear friends, the correct answer is C, 50% only. Now let's see if you are revising enough. What is the minimum net fund known for NBFC P2P? I will be checking your knowledge right now. Just minute before I have told you the correct answer. We have discussed it. Come on, guys. I need the right answer. What is the P2P minimum net own funds requirement? RBI has released. Yes, Nikhil. Nikhil has given it the right answer. It's 20 million. Okay, now let's move to question number 81. Now this is regarding banking ombudsman. All these are like recent changes which have taken place in the banking landscape. Yes, Martin has also given the right answer. Nikhil has also given the right answer. Kudos to all of you. Question number 81. Vijay has also given the right answer indeed. Question number 81. Regarding banking ombudsman. Anji, so who will be giving me the right answer? Yes, it's 1 lakh. Nitish has given the first right answer. It's 1 lakh. But overall, you will have to remember it. The total compensation is 20 lakh plus 1 lakh. Okay, so please remember that firstly 20 lakh has been given as a total, I would say, compensation if there has been a case, was 1 lakh additional is given for mental agony. So you have to remember this. For now, let's revise about banking ombudsman. There has been three different schemes which has been released for different ombudsman. The first is regarding which was released in 2006. Actually, it was further released in 1995, updated in 2006. This is banking ombudsman scheme. Very important. Another scheme was released regarding banking ombudsman scheme for NBFC. This was released in 2018. And there was another banking ombudsman scheme related to digital transaction, which was released in 2019. So these are the three different ombudsman scheme. But recently we have also seen integrated ombudsman. So all these are different concepts regarding banking ombudsman, which you have to remember it. So if someone asks you what will be the maximum compensation, it will be 21 lakh. Okay, so please remember it. But this question was regarding mental harassment and something, so that's why the answer was 1 lakh. Now let's move to question 82. Total Central Board of RBI. This is regarding the RBI, Central Board of Directors. Who will give me the right answer for this particular question? As per Reserve Bank of India Act, Section 8, if I am not wrong, what is the composition of total board of governors of RBI? Total board members rather. Hanji, my dear friends, the correct answer is B21. If you want to know the total compensation, the first is governor. There are four deputy governors, so total five from RBI only. Then there are four zonal directors, north, east, east, and south. So these are four, total nine. Two have been directly recruited, or I would say directly appointed by the government of India, so total 11. And these two are Department of Economic Secretary plus Financial Secretary. These are the two people who have nominated by government. Plus additional 10 people are also appointed by government of India who act as a non-executive director, or you can also say they act as external members of board of directors. These are also nominated by government of India. So total 21. Okay, so 10 directors nominated by central government. Question number 83. Incorrect regarding Monetary Policy Committee. Now we are moving towards the functions of RBI. Very important chapter with regard to phase 1 as well as phase 1 as well. You have to identify the incorrect statement. Please focus on this word. Come on, I need the right answer. Who has been active in the whole session will be definitely be beneficial for you, because we have covered n number of topics today. Starting from TVM, starting from bonds, going to equities, debt, mutual funds, public-private partnerships, financial inclusion, everything has been covered in this chapter. Yes, my dear friends, the correct answer is C. They will have to meet at least 4 times, not 6 times. But they are, according to the current norms, now we are meeting 6 times, but at least they have to meet 4 times. They can also skip it 1 or 2 times, but they have to meet it 4 times. Now tell me, in which year RBI Act was amended for MPC? In which year there has been a in which year RBI has used this particular word, which is known as flexible inflation targeting framework? In which year RBI Act was amended for MPC? Options are 2015, 16, 17 and 18. In which year the amendment was made? A very crucial question. No, my dear friend, the correct answer will be 2016, so not 2017. It was based on Urjit Patel committee. Please remember this, very important. Now let's come to question number 84. Very important for small financial banks. Payment banks and small financial banks are also very much in news, so it forms a very important component of your syllabus. Come on, people, after this we have only 15 questions. Amendment was made under RBI Act in 2016 based on the Urjit Patel committee. Nikhil is saying it's D. Can someone also tell me what is the minimum capital required to start a small financial bank? Yes, the correct answer is D. It's 25 lakh only. But can someone also tell me what is the minimum capital requirement to start a small financial bank? Prachi is also going with the right answer. It's D only. Kudos to you. What is the minimum paid up capital, or I would say minimum capital requirement for starting a starting a small financial bank? Yes, Nikhil is saying it's 200 crore, but my dear friends, according to the internal working group, they are planning to increase it to 300 crore, but there has been no official notification by RBI. So for now being, please remember it 200 crore only. Now question number 85. It's not 150 crore, Martin. Please update it. It's 200 crore. Question number 85. A very tricky question. Let's see who falls into the trap now. What is the correct answer for question number 85? I can see some people are now avoiding the trap. That's really good. Yes, the correct answer is E. Payment banks cannot lend any money, but they can accept deposits up to 2 lakh. So please remember this. This is a very important learning right now, that payment banks cannot lend any money. That's why the answer was none of the above, but they can accept deposits up to 2 lakh. Now please tell me, what is the capital requirement to start a payment bank? What is the minimum capital requirement? What is the minimum capital requirement to start a payment bank? What is the minimum paid up capital requirement to start a payment bank in India? 1 lakh? No, not 1 lakh. It's very much low, I think. It's either 200 crore, either it's 100 crore, either it's 300 crore. I can see now Chiranjeev has given the right answer. It's 100 crore only. So very good, Chiranjeev. Nitin is also going with the right answer. Yes, they can accept deposits up to 2 lakh. Good, Prachi. Now this has been a question regarding net interest margin ratio. This now we are moving to risk management. A very important chapter regarding Basel norms and everything. While calculating the net interest margin ratio, what will come in the denominator part? This is the toughest question, I would say, because many people, I think, are ignoring some easy chapters like ratio and cash flow. What will be the correct answer for question 86? Vijay is going with A. Chiranjeev, I think you have fallen into the trap. No issues. The correct answer is D, average earning asset. What does net interest margin shows? That how much interest which bank has earned on its investment and how much bank will have to pay out on its deposit. So it shows the ratios between these two components. In I think the image is really blur. Sorry for that, but in average earning assets has been the denominator part. Now let's come to question number 87. A very easy question, yet many people get confused on it. Question number 87. Come on, people. We are about to cover everything in the financial awareness part. We have covered very different topics. You are the future grade B officers. So you have to need to have that particular energy. What will be the correct answer for question number 87? A very easy question. Take less than 10 seconds. Save your time here so that you can invest your time in some tough questions. I can see the maximum are confused between B and C. Yes, my dear friends, the correct answer B is B, because this particular bank was there in Germany and it faced many issues regarding the different time phases, and they've fallen into the part of liquidity trap as well. So this has been a bank. There has been also a bank which is Frankfurt, which was a counterparty to it, but nothing that much to go in deep. It's Herstat risk. What is question number 88? Application based question. Please do not use a pen and paper. This can be answered if you know the table of 9. Anji, so I will be asking one counter question to this as well. Now we are moving to Basel norms, which is a part of your risk management. Who will be giving the right answer for question 88? I can see RK is going with B. Even Summer is going with B. Well, I think let's wait for few answers. Do not use a pen and paper because this calculation is very much easy in nature. What will be the right answer for question number 88? D, 52. Rohan is saying it's 52. Let's see. Nikhil is saying it's C. Let's wait for 5 more seconds and then we will reveal the answer. Prachi is also going with C. Vishnu is also going with B. Vishnu, and there has been a contention of answers between these three. See, nothing much to do about minimum capital adequacy ratio as per Basel norms. Yes, Prachi has gone with the concept right. It's 8%. Do 8% of 400, you will get the right answer, which is 32. But if the answer is according to RBI norms, then what will be the answer over here? Tell me, what value should I write in millions over here? If the question is not Basel norms as per RBI norms, then what will be the answer over here? Someone please comment it. If you know the value which RBI requires banks to maintain as a capital, minimum capital adequacy ratio, what will be the answer? How 52 million? Please explain me. It is just an application based question, very easy. Yes, Vijay has given the right answer. It will be 36 because for RBI it's 9%. For Basel norms it's 8%. Good, Vijay. Now let's move ahead. Question number 89. Again, an application based question. This is the level of RBI Grade B exam which you will see in the real exam as well. How 90? No, no, capital adequacy ratio according to RBI is 9%. Minimum capital adequacy ratio. So for I think 400 का 9% करना है simple, that will be 36 million. No, 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 you people are going wrong on 10.5 and everything. See, for Basel norms, RBI has predicted it to be 9%. Basel committee is going with 8%. Please remember this. But if I add the capital conversion buffer and everything, then it will be higher than what Basel committee has recommended. Let's now let's focus on question number 89. I can see maximum of you are going with D. Hanji, the answer will be operational risk. Market risk refer to the price risk, price sudden changes. Liquidity risk, what happened in ILFS, we all know. Okay, so liquidity going out of the system. Credit risk is as much same as default risk. Operational risk is because of internal frauds which happen. So you might have seen that PNB is also a victim of operational risk. Question number 90. Now we are moving to 15 Finance Commission. A straight away question was there in 2021 regarding the recommendations which have been made. I know this has been a pretty tough, but you have to identify the major grants which have been given by the Finance Commission. This is a typical phase 2 question. How much performance based grants have been given for incubation of new cities? 15th Finance Commission question is very very important with context to 15th Finance Commission plus FRMBM. All these questions are really very very important. See, the correct answer will be option D, 8,000 crore. There is no way which I can explain this, but you have to mug it up. As simple as that. You will have to remember the key allocations which have been made. As simple as that. Now let's move to question number 91. This is regarding the health recommendation of 15th Finance Commission. Hanji, so who will be giving me the right answer for question number 91? It's 8,000 crore, Nitesh, not 5,000. Who will be giving me the right answer for question number 91 now? Come on, we are in the last leg. Yes, Nitin has given the correct answer. Superb, Nitin. Who will be giving me the right answer for question number 91? Yes, it's 2.5% of the GDP by 2025. As simple as that it could get. Even Prachi has given the right answer. Question number 92. One special fund has been created under Finance Commission, 15 Finance Commission. By the way, who has been the chairman of 15 Finance Commission? Can someone name it? Who is the chairman of 15 Finance Commission? Who is the Yes, Vijay has given the right answer. It's modernization. Can someone name the chairman of 15 Finance Commission? NK Singh. Yes, it's Nand Kishore Singh. Superb. Now let's move to question number 93. Out of total divisible pool of 42%, 1% has been allocated. An extra 40, oh, so I would say mistake has been done. Yes, it's NK Singh. So all of you remember it. It's really good. I think I have already revealed the answer for question number 93. That's a mistake from my end. Yes, my dear friends, the answer is 41%. This will be going to states, and this 1% has been there for UT of Ladakh and Jammu Kashmir. So this has been our question. Now let's move to different types of GST, or we will go to taxation part in the last part of this particular session. Come on, come on, last six question. We cannot lose the energy. Which of the following taxation system imposes a flat tax rate irrespective of the income? What will be the answer for question number 94? Summer is going with B. Nikhil is going with C. Nitin is going with B. Vishnu is also going with B. The correct answer, my friends, will be proportional. A flat tax rate has been given. Under progressive, if your income increases, then your tax rate will also increase, like the way we have income tax in India. Regressive taxes, if your income increases, then your taxes reduces, or it can be vice versa as well. For example, the GST. For example, if you see the person who is working, let's say as a laborer, will be paying 5% GST on the Parleji products. At the same time, Mukesh Ambani will also be paying 5% GST on the Parleji's product. So that cannot be the answer of regressive. Under proportional, you will be paying fat 25% or let's say 15% on your income. For example, corporate tax rate. Irrespective of what your income or what your profits is, you have to pay 15% as a corporate tax rate to me. Now let's come to question number 95. Last five questions. Let's see, or I would say six rather. Last 5 or 6 to 5 questions. Who gives the right answer for this question? Let's see. Come on, question number 95 on e-way bill. What will be the right answer for question number 95? Stamp duty. Okay. Dinesh is saying it's stamp duty. What will be the right answer for question 97? A very static knowledge regarding GST. Directly mentioned in your syllabus. Karan is saying it's 10 kilometer. And the good value exceeding 50,000. Please remember the answer is B only. It's 10 kilometer only and the value of goods should be above 50,000. Then only you will be able to have an e-way bill. Very easy. Question number 96 on integrated GST system. You have to identify the correct. Now I can see we are into the last 5 questions. Come on. We have covered more than I think 20 chapters today on different domains. I will not be asking your score because I know it has been tough for some. At the same time, many people have come in and joined out. So please recollect your score later part. What will be the right answer for 96? Many people are going with C. Yes, my dear friends, the correct answer will be C because under this, the under IGST, if you are supplying goods between two different states, then you have to pay IGST. As simple as that, nothing much to explain. Question number 97, a very important tax. Who will be giving me the right answer for question number 97? Nilesh is saying it's D. Karan is saying go with C. Kirtiman is also going with C. Nikhil is saying 97A. See, my dear friends, the correct answer will be option C. Why? Because this has been a negative externalities. Remember this. But there has been a very special tax which also known as Tobin tax. Tobin tax is on hot money, or you can say it's as a financial inflow and outflow. To stop it, for example, in India we have securities transaction tax. So Tobin tax is like you restrict the flow of money. Please remember this. This is also very important. Question number 98. I think this is ratios. A very simple chapter. All you need to remember is some ratios. Formula of ratios. Come on, people, do not lose your energy. The correct answer for 98 will be current ratio is equals to current assets divided by current liabilities. What will be the correct answer for question number 98? I can see maximum of you are confused between A and C. Yes, my dear friend, the correct answer will be C. Current ratio 2 is to 1. If you have an enough ratio of 2 is to 1, then you definitely have covered up your financial liabilities, which is current liabilities, or I would say this is a short-term ratio. Okay, please remember this as well. Now let's come to question number 99. Come on. I need the answer for question number 99. Debt to equity ratio, also known as debt upon equity. This is a very important ratio when it comes to leverage. What will be the right answer for question 99? Nikhil is going with A, 1 is to 1. Hanji, my dear friends, the correct answer is A, 1 is to 1. A very simple concept. All you need to remember is that you cannot be over leveraged. Kuldeep is saying it's 3 is to 1. No, no, my dear friends, it has to be 1 is to 1. Ratio of 1 is considered quite satisfactory in this case. Please remember, we cannot be too much over leveraged. Question number 100, the last question or last question of our session. This is from cash flow, a rather very basic question. I do not expect RBI to go that much deep into cash flow. So question number 100. Come on, people. What are the three different kind of business activities under cash flow? And if I'm not right, if I'm not wrong, it is according to accounting standard 3. Who will give me the right answer for 100th question? 100B. Yes, there are three activities: investing, operating, and financial. So these are the 100 most important questions for you, my dear friends. Thank you very much for having me over here. And if you have any feedback for me, kindly share in the comment box below. This was my first YouTube session, so I'm really sorry I made a mistake into one of the questions regarding the EPS and P, but I hope everything is clear right now. I have already cleared the confusion of that particular question in one of the question regarding 50. So if you have any doubts regarding any part of the content, let me know. And please, it was my debut session on YouTube. If you have any feedback for me, please share it in the comment box. I totally welcome all the positive and negative feedback. That will help me. And I wish you all the very best for every exam which you are facing right now. I hope your preparations will be going very, very good. That's really nice. Thank you, Nitin. Chalo then, meet you in the next class, and we will have a good discussion there as well. Till then, please take care. And if you have any feedback, you can share it, provided you have different. Chalo then. Views as well. I welcome all the positive and negative feedback. Bye. Take care.